Morning, everybody, and welcome to the August 26th issue of the Tucson Mortgage Weekly. I'm Todd Abelson. Thanks for joining in for a couple of minutes. Okay, let's first of all take a look at what happened last week. Well, everybody was kind of sort of waiting around, waiting for the Fed Open Market Committee meeting minutes to come out to hear if there was going to be any further clarity or any clarity at all on when the tapering would begin. Now, if you'll recall, this is supposedly the beginning of the end of the quantitative easing, and as a result, it's supposed to be Armageddon to the financial world. Obviously, it's going to happen sooner rather than later, so everybody was waiting around to hear if September was going to be the start. And guess what? Nothing. Nobody said anything. As a result, everything sold off. The stock market sold off, the mortgage bond market sold off, and rates went up, and man, there was a lot of craziness on Wednesday, Thursday. But then the squirrels kind of popped their heads out of the hole and said, you know what, there are some great buys out there in the mortgage-backed security world. So they started buying up mortgage-backed securities, and we started seeing rates kind of sort of coming back down again. Now, they're still above what they were even after they stabilized a week or two or three ago. But, you know, they're back down from the highs that we saw last week and the week before. So that's overall still really good news. What's happening? This morning, there was a report out, the Durable Orders Goods Report, which is a report of how people are buying, or the economy is buying equipment that's supposed to last more than 3 years, like dishwashers, refrigerators, and it was down huge. As a result, it was a big sell-off in the stock market. It kind of recovered a little bit. And ultimately, again, people thinking, gee, maybe the end is not so far, it's further away than we thought, so golly gee, interest rates need to come back down again. So again, we're seeing some buying of mortgage-backed securities, and we're seeing rates kind of moderate back to, quote, the reasonable levels we saw after the knee-jerk increases in May and June. This week, here's the deal. There's really nobody at home. This is the end of the the end of the August month. Summer vacations are ending. Remember, back east, where all the trading typically occurs, there in Chicago, school starts after Labor Day. So most of the families are taking their vacations. A lot of traders are going away early for a long weekend. So there's not going to be a whole lot of people trading. The problem with that is when there's thin trading, it's usually to the negative. So we're kind of cautiously watching what's going on. We see if we can hang on to the gains. There is a report coming out at the end of this week that'll be a judge of inflation. But hey, you know, if there's nobody around to hear it, who cares? So anyway, what I would do is keep an eye open on what's going on with stocks. If you see stocks kind of running up for any reason, which I doubt, we may see some increase in rates. Great time to lock. Certainly be cautious of what's going on, because if we've seen rates can go up pretty quickly at almost any time. So when you get something you like, lock in. Otherwise, check back tomorrow, see how the rates are doing. Don't forget to check out the website, TucsonMortgages.com. I'm Todd Abelson. Make it a great week and have a happy Labor Day vacation. Bye-bye.